Hey guys, it's Squidtoshi. Let's talk about my favorite Tradingview indicators. Spaceman's Key Levels. It's an indicator that provides you with specific time frame levels for the 4-hour, daily, weekly, monthly, and quarterly, with the ability of selecting which levels you want to see from price open, previous high and low, and previous mid-level. Spaceman's Key Level indicator also gives you access to Monday ranges. Let's jump over to TradingView and have a bit of a look. When you add Spaceman's key levels to your chart, it should look roughly like this. We're now back over at TradingView, and I've just thrown Spaceman BTC's key levels on the chart. I did take away some of the high and low ranges, but let's jump in the settings and have a look. So as we can see, we have the 4-hour open, the 4-hour high low, and previous mid. So we can just select these, and these will just add them directly to our chart. So if we jump down to a 4-hour, we can now mess around with the opens and closes. So we tick the open and we can see it appear here. And then we can also get the previous high and low for the 4-hour, which gives you the ability of scalping low time frame ranges if you just want easy range high, range low, and you have previous mid. Let's keep going. Daily is very similar with previous high and low and previous mids. Then we have the Monday ranges. I rarely use Monday ranges, but some people do find them useful. I'm just going to untick these as I go to show you guys what I'm primarily using. Then we come down to the weekly, which gives the same settings as everything before. Weekly high and low, weekly previous mid. Monthly is the exact same, so is quarterly. And you can actually come in and change whatever color you want these lines. And then we have yearly. Primarily when I'm using Spaceman's key levels, I'm only using the weekly open and the monthly open. Since when I chart Bitcoin, I'm usually starting from a weekly chart and then working back. So I'll come onto a weekly chart and then go to a 3-day and then go to a daily. And if I'm charting the 3-day and I really want to lock in where the daily level was, I'll just come in and I'll just put a horizontal line where the daily is and then go back to my 3-day chart and then have that level there. All around, Spaceman is probably my most used indicator. It's on every chart without fail. It can be used for virtually everything because it's just a levels indicator. Let's jump to the next one. Stoch RSI. It's a basic oscillator that tracks if the underlying asset is oversold or overbought. Stoch RSI shines when price is in a range and isn't in a strong trend, which is why it's been one of my most used indicators over the past few months due to the crab market we've been in since late January. Let's just have a look on TradingView. I feel like everyone's familiar with Stoch, but just a quick rundown. We'll go to a daily chart. When Stoch crosses about the 75 to 80 point mark, that usually indicates that the asset is overbought. Conversely, when Stoch is below 20, that points to the asset being oversold. How you trade the Stoch RSI is you look for crosses. When the blue line crosses down through the orange line, that means that the market is going to shift to the downside and people have realized that the asset is overbought. Conversely, when the blue line passes up through the orange line, that usually means a move to the upside. Let's move to the next indicator. Troy's RSI Divergence indicator. RSI is an indicator that I permanently have on my chart, and I use it as a momentum indicator as it moves slower and provides me with oversold and overbought areas. While its slower nature acts as a good measure for overall momentum on higher time frames. And the best one I've found is RSI Divergence by Troy. What I like about it is it gives you visible indication on divergence and makes it easier to ascertain where price could be heading. Let's go jump into its settings and see what you can change. Okay, we're in Troy's RSI indicator. It gives you a bunch of settings. Now personally, I haven't changed any of them as it works fine without, but you could go through and change all the different colors and remove what you don't want. To simplify, Troy's RSI indicator gives indication to bear and bull divergence, and also hidden bearish and bullish divergence. Let's move on to the fourth indicator, MACD, or Moving Average Convergence Divergence. MACD is another oscillator that I like using, and mainly I use it on higher time frames, usually the 3-day, the weekly, and the monthly. In an aim to find large market shifts, for example, every time the MACD crosses on the 3-day Bitcoin chart, price usually follows in the direction of the cross. We can see the cross here as Bitcoin's price moves up. We see another cross to the upside here, and then a large indication that we're going to the downside. Again, the MACD doesn't work all the time, but it still did cross here that I anticipated to be a larger move that was still a move up, but it did not have the momentum needed to really follow the overall trend that the MACD on the 3-day was projecting. Let's move on to the next indicator, the Volume Profile Visible Range, or VPVR. It's a staple on all my charts, along with the RSI, and honestly, can act as one of the most accurate indicators on the list. The VPVR tracks price levels with the most traded volume in your current visible range, which is displayed through a histogram on either the left or right side of the chart. The more trading in the area, the larger the node becomes, giving you clearer supply and demand zones. Gaps in the VPVR suggest that not much trading happened at these levels, and may suggest that there is no support there. These levels are vapid, meaning once price loses its main support, it will fall through the gap to the next support, or to the next VPVR node, which is usually confluent with other supports and resistances. We can take a look at the weekly chart here on Bitcoin. As we see, we have a node here on the VPVR that indicates that a lot of trading happened at roughly the 38,700 price point, which has confluence because we can pretty much draw a support line right here. We had support from these candles, as it was the close for this weekly candle and the open for this weekly candle. We had another retest here and a failed breakthrough here. Bitcoin then also did come through and try and find this as support as we traded sideways through this area. We're now retesting this level as support, giving this node a bunch of confluence, strengthening its indication that this area should act as support. As we can see, we have a small gap between the 38,700 level and the 35,800 level, meaning that if Bitcoin did break through this support at the 38,700 level, there is a good chance that Bitcoin could see a wick down into the 35,800 area, as we've seen with all previous breaks of this area. One more thing about the VPVR is you can go into its settings and you can not only play with the colors to make it suit your chart, but you can also change your row size and increase them. If you want less rows, you can turn it down and have less rows displayed on the histogram. Let me turn that down even more to really exaggerate it. So that's 25 rows. That's 250 rows. I usually use it on 500. Let's move on to the next indicator. Moving averages, and specifically the 20 and 50 period MA cross, I'll usually have on my chart, as it can help confirm other indicators and also provide good levels to exit in a trending market. Historically, when Bitcoin's price crosses below the 20 period moving average, a further move down usually follows. As we can see here on the 18th of November, Bitcoin's price wicked below the 20 period moving average. On the following 3-day candle, Bitcoin's price crossed and closed below the 20-day moving average, flipping this moving average into resistance, and a price move of 43% to the downside followed. We can also go to a daily chart and observe a very similar thing in trending markets. As we see here, we can get a bit more of a cleaner idea of what happened. Bitcoin on the daily closed below the 20-day moving average on the 16th of November, tested the 50-day moving average, and then closed below it on the 18th of November. To me, this signifies a major move to the downside, as historically, this has worked every other time. We can take a look at the previous top on the 15th of April, where Bitcoin loses the 20 period moving average, closes below it, and then proceeds to close below the 50-day moving average. It does come up to test it, but it couldn't clear the 50-day moving average with enough volume or conviction to continue price higher. And Bitcoin experienced a retracement of about 50%. Bonus indicator, the market Cipher 1.1. It's a moving average indicator that I used to use, and it uses 8 exponential moving averages, displays crosses, triangles, and dots to give you areas where you should long or take profit or even short. Let's jump over to Tradingview and take a look. So we're on a daily Bitcoin chart with the market Cipher, and I just wanted to show you a couple things. Now, this indicator does work in a trending environment a lot better. So just taking a look here on the daily, If you were to follow this indicator as its own trading strategy, on the 3rd of October, you could have entered a Bitcoin trade at around 47,000. And then the indicator would have told you to definitely exit, or from my understanding, the red X's mean to exit or to take majority of your profit at around this level. So let's even go a little lower. Let's say you exited right on that like wick here on the 29th of October. That's about a 30% directional move you would have got on that trade. And that's 30% without leverage. Now, I feel like we all know as crypto traders that sometimes leverage gets involved. We can go further back and we can look at other moves on the daily that's around here on the 1st of Feb that doesn't indicate you should exit until the 24th of Feb or the 25th of Feb. Another decent directional move up. If we back out to the 3-day with this indicator, we can even see that there's less noise. So of course, this indicator called this massive move up, but a more realistic move up for us would have probably been this move here on the 2nd of August, when Bitcoin's price was roughly about 39 to 40k. You could have entered here, taken some profit on this candle, on this green dot, exited your position on this X, re-entered here, and continued the trade. If you entered here, see, you could have entered here and had a stop loss about there. That's only a 6.8% stop loss. And then you could have targeted a high of this price and then re-longed this bottom, targeting a new high. So that could have been your trade, and your stop loss would have never got hit. So the market cipher is honestly a reasonably good indicator at a higher time frame, in my opinion, in trending markets. That doesn't go without saying that you can use this on a 15-minute chart with some success. I feel like you'd want to use some other indicators to add confluence. We can see that it gives indication along here to take some profit on the same candle and then to ride it up and fully exit here. Again, an experienced trader may have wanted to add here. They may have taken profit after it crossed the first EMA and then re-entered here as it wicked on the 34 period EMA, since it did open with a preceding 15-minute candle to the upside. So all round, this indicator is a lot of fun and you can use it as a sole indicator. I think when I was using the market cipher, it was one of the only indicators that I had on the board. So that's all I have about the market cipher. And just to finish it off before I let you go, this is pretty much what my chart looks at the moment. I have Troy's RSI Divergence. I have a basic Stoch RSI indicator. I have a VPVR with an MA cross. That's my chart set up at the moment. That's all I have for you today, guys. All the links to the indicators that I talked about will be in the description. And while you're down there, smash that like button, consider subscribing, go follow me on Twitter. Squidtoshi out.